We are live, as Peter likes to say. My name is Daniel Hernandez. On top of me is, well, not on top of me, but you know what I mean, Peter Zalewski with Miami Condo Investments, Condo Vultures, and we're here to give you the straight talk. This is buy, sell, hold. You look at our rundown, we got a ton of topics to cover with you today. We got 60 minutes, so we're going to try to keep ourselves honest and keep each topic to 7 minutes. If we got a little bit more time at the end, what we aim to do is go back to those, and we're going to call that overtime. Right now, it's just Peter and I. In the weeks ahead, we hope to bring in marketing directors, developers, you name it. If you want to be on the show, you let us know. And we're new at this, right? So sorry, we're about 38 minutes late, 40 minutes if you're keeping score, but we're going to launch off now. And Peter sent me an amazing article that, well, folks have been talking about the Miami housing market, the South Florida housing market cooling down. And if you look in Clearwater, if you look in Tampa, if you look in Orlando, Jacksonville, all up and down the Gulf and Space Coast, the Florida housing market very much is cooling down. But is that the case here in Miami? Peter, what's going on?
Well, Daniel, first of all, congratulations on working out the technology side of it. It's always a challenge of trying to get things rocking and rolling, but I will tell you, it's the summer. It is Memorial Day weekend. Most people are probably already pissed off. So maybe they're seeing it live, maybe they haven't. So if you're not seeing it live, it's not a big deal that we were 38 minutes late. But I will tell you, it's not like we were sitting back smoking a cigarette, drinking a cortadito or anything like that. And by the way, if you are in Miami 38 minutes late, you don't even have to call to notify the person you're late because they just assume you're going to be on Miami time. So that being said, let's go back a year ago. A year ago this weekend, we ran some data. We were looking at the winter buying season, which is from November through April. And we spotted at that point that the 2023, 2024, remember November through April, we had already spotted that sales were falling. We already saw what was going on. And the sales last year were comparable to right after the Lehman Brothers failure back in September of 2008. So we were already on this. We already saw that coming, but now it seems like it's spreading beyond Miami and beyond the Tri-County, South Florida area. And it's starting to go through the rest of the state, and most likely it's going to go to the rest of the country. Why? Silicon Valley makes technology. South Florida, we do housing. We do condos. We do a lot of condos and a lot of housing. And typically what starts here, it spreads, just like what starts in technology starts in Silicon Valley, and it spreads. So we are really a canary in the coal mine, and we saw this a year ago. And what I can tell you going forward, it's going to get a lot worse looking at the statistics. We just ran some data. We looked at April over April over April for the last decade. We have not had this many active listings on the market since 2016. And at 2016, we were building out of the Great Recession. So, it's some real troubling signs from the housing market. But I would say I tend to lean towards the bearish side. Daniel could probably give a little bit better perspective from, say, a sender to bullish side perspective. So what's your take, Daniel?
Well, my take, like we always talk about, it's a tale of 2, 3, 4, 5 cities here in Miami. What market are we talking about? Are we talking about single family homes under $1 million? Are we talking about condos over $5 million? I mean, there are so many little siloed markets here. You can't just say, the Miami housing market, right? If you're buying a $10 million house, guess what? That house a year ago was cheaper than it was today, right? If you're in the market for a vintage condo, well, now's a pretty good time to start shopping because, as you pointed out in the past, Peter, what are we at? 30, 40% down, right?
Well, it depends on like a certain market like Sunny Isles, one of these vintage condos, 30 years or more. This is like a critical point under part of the legislation that came because of the Surfside collapse. At 30-year mark, you got to do all kinds of stuff, and it's all kinds of extra costs. So in a place like Sunny Isles Beach, which is just north of Miami Beach on the Barrier Island, you're looking at an 82% discount over the overall average price. So what I mean by that is whatever the overall average asking price is in Sunny Isles Beach, take 82% off of it, and that's how much they're trying to get for these vintage condos. Now, granted, they're all pieces of whatever, but that being said, you're still living in the area. You can still turn around and rent it. So that's what kind of price discrepancy you're seeing.
Would you even be in a better place if you're looking at a 50-year-old condo than a 30-year-old condo? Because you've already gone past the 40-year milestone on a 42-year-old condo. So let's go to Old Brickell, right? You're looking at the Atlantis. You're looking at some of these buildings in Old Brickell, they've already hit their 40-year inspection. Their 40-year was 4 or 5 years ago. So if they've already incurred that special assessment, I mean, on the condo sale side, we're very rarely seeing buyers being on the hook for these assessments. They negotiate it in the transaction. They say, I'm not going to pay this $70,000 or $80,000 transaction. You're going to pay it, or negotiate it down. And I know we're going to talk about HB 913 coming up, which is a whole slew. That's the kitchen sink bill in terms of condo legislation that I think Governor DeSantis is, if he hasn't signed it by today, he's going to sign it. That's at least what they're putting out there, right?
Yeah. That's what the news reports are saying. Governor DeSantis might sign it, but let me just point out though. So, the concept is, let me go in and I'm going to take a run at one of these vintage condos. Again, 30 years or more. This is a special inspection. It's called a milestone inspection report. So at the 30-year mark, you go ahead and you do this again as a result of Surfside. So everything is fine. You run the numbers. You know what it's going to cost. You fund it. You start building it. And anybody who's done construction knows, as soon as you open up the wall, you might find stuff you did not expect. And as a result of that, you see cost overruns. You see all kinds of changes. You see other things that are going to have to occur. Now, we'll be talking about this type of scenario shortly with another piece over in Clearwater, but these are sort of some of the concerns. So there's a lot of unknown. But what I will tell you is, as we go through and we understand this and we study this, there's going to be a lot more data. It's all about data right now. Let's see how much data we can collect. We'll process it. We'll look for trends. So I think eventually it's going to make a lot of sense. But right now, there's still too many unknowns, because anybody doing rehab knows, I buy this house, I got everything planned. I open up that wall, and behind that wall is something that was not supposed to be there. And now, lo and behold, I have to do things that I had no expectation. And that's the risk of going into one of these older condos, these vintage condos, from my perspective.
And we're almost out of time with this, but top right corner, you see 30-year fix is at 7.07. I haven't seen the 30-year fix go above 7% probably since our Liberation Day in early April. Do you think this trend is going to continue?
Well, the issue at hand, and make it real simple, whatever the 10-year Treasury is, right now it's somewhere in the ballpark, 4.5 to 4.6. Yesterday was a little bit of a day. And Moody's, by the way, downgraded the United States credit rating, credit. And as a result of that, it's riskier now to buy bonds in the United States, do anything in the United States. Therefore, you have to offer more money to get money to come in. So as all this goes forward, and if this big, beautiful tax bill passes, that just looks like we're going to make our credit rating even weaker, because we got a hell of a lot more debt, and we may or may not be able to generate the cash that's necessary. So whatever 10-year Treasury is, add 3 points. That's your normal mortgage rate. Some of the mortgage rates you see out there, generally speaking, they're probably going to be for preferred types of borrowers. But what I would tell you is, I would not be surprised by the end of the year if we're not north of 8% on mortgages.
And that brings us to our next topic. What are the implications of a 50% tariff on the EU?
Well, generally speaking, I think the 50% tariff announcement, which came out today, it was perfect timing for our buy, sell, hold Miami podcast, because what it means is there's going to be hemming and hawing, and most likely based on the track record of what's happened since Liberation Day, there'll probably be a pause. Now, what I will tell you about a pause is, every single time there's a 90-day pause, what you do is you basically keep people in their seats. You keep them on the couch.
We're in limbo, right? I talk to traders and they say, I don't know what to do. The fundamentals don't work.
The fundamentals don't work. And who's to say? You might wake up Monday morning and this 25% tariff that Apple's going to have on all product, if it doesn't manufacture in the United States, it might disappear. So,
or it might go to 125%.
100%. But let's just say today, here we are, Memorial Day. So we're in May right now. Okay, let's go back to April. Liberation Day, April the 2nd comes out. We got this big, beautiful announcement. We got the banner. We're going through all this process. Market starts reacting. 10-year Treasury, bond market starts moving in a direction that Scott Bessent, Treasury Secretary, doesn't like. He starts getting in the ear of President Trump. President Trump comes forward and puts a pause on it. Puts a 90-day pause on everybody except China. So lo and behold, that takes our April, call it first week of April, second week of April announcement of Liberation Day. That takes us to July. Okay, fair enough. Now you're going to negotiate with China separately. Then they go ahead, they start negotiating with China. It's a pissing match, back and forth, back and forth, back and forth.
Now what are we at with China? 30%?
Well, 38%, but 30% is what was new. 8% was already in place from the original tariffs, from everything I've read. But basically, the China situation, after a meeting in Switzerland, they say, look, you know what? We're going to go 90-day pause. So we got the rest of the world on a 90-day pause, which takes us through July. We have China on a 90-day pause, which takes us to August. And assuming the Europeans go down the same route, another 90 days takes us to September. So effectively, you can't do anything until probably October, November, or the fourth quarter.
So what
do you do right now? You want to invest. You don't want to invest. You want to import stuff. Maybe you brought stuff in. Apple, remember, leading up to Liberation Day, they were renting out planes, jets, flying over all their iPhones. They were trying to beat the tariff. And then as soon as it comes, President Trump says, well, we're going to make an exemption for that. So they pissed away all that cash. So the uncertainty, I think, is really sort of challenging, because remember, recessions a lot of time are psychologically driven. You get in that state of mind, you start hearing bad news, and next thing you know, you slow down. One thing leads to another, and before you know it, we're in a difficult spot. And we did contract in the first quarter of 2025. If Q2 contracts as well, we officially could be in a recession. Now, there's some group that has to make the decision. Is it really a recession? Is it not a recession? During President Joe Biden's days, we had 2 contracting quarters, but they didn't call it a recession. Maybe it was political, maybe it was whatever. But keep that in mind. We could be in recession officially by the end of July, beginning of August. But we'll still have the pauses going on all these different tariffs. And now 50% on Europe. That's actually more than China. Even China had 38% or 30%, whichever way you want to look at it. We're still more with Europe. Why? I thought there are elements.
But what are the implications on the South Florida condo market for tariffs? What is this signal to an investor who maybe they've been looking to 1031 into a Miami condo or a single family home for that matter? But you're the condo expert. What are you seeing? What are you seeing? How are attitudes changing with all of this news of tariffs come out? Are investors more akin to investing in a condo because maybe they don't want to put their monies in equities, or what's the thought process going through your clients' heads right now?
Yeah. Two sides of the coin. First side of the coin is John Paul Trump, the CEO of the related group, basically the son of George Perez, the chairman. So the son, John Paul Perez, his title is CEO. He came on CNBC and he said he saw 20% across the board increases in construction costs based on bids they were getting from contractors who had to try to anticipate what tariffs are going to be. So what I'm saying there is costs are going up. And if costs go up, you can bet your ass developers are not going to eat all of it. They're going to pass some of it along. So that should mean pre-construction prices should be much more expensive. And any condo building going through any kind of restoration, fix, whatever, they're going to be looking at more. Now, maybe it's justified because of tariffs, and maybe it's just because the contractor or the group selling the materials, they want to make more money. We don't know, but basically everything's much more expensive. So that's
why would a contractor or somebody selling raw materials, if the tariffs come down, are they just going to drop their prices? That's on them, or they could.
Well, I can tell you, I go into a supermarket, I go into a restaurant, and I'm very price sensitive. I watch everything. I know the prices. I'll go to 5 different grocery stores in order to get the best deal and everything.
We've talked about the cafecito arbitrage.
Yeah, it's 100%. But I will travel around. But what I can tell you is you're already seeing price escalation on product that is not imported. I'll give you a perfect example. Anybody like cream cheese? Philadelphia cream cheese, nice brand. Okay. Prior to the pandemic and the transitory inflation, whatever you want to call it, cream cheese went for $225, $250 or so. Generic went for $150, $175. We go through the pandemic. It is what it is. Prices are doing what they're doing. Now we got the tariffs. Where is cream cheese today? I was in Publix. I took a picture because I was shocked. $4.59 for 1 stick of cream cheese, which used to be
doubled.
It has doubled. Now, I don't know. Maybe we don't have cows in the United States. Maybe all of the milk that's necessary for the cream cheese is coming in from elsewhere. But
I doubt
that
it.
I think is a perfect real life example of companies trying to take advantage of this overall fear and pricing of tariffs to basically try to, wet their beak and make as much as they can. And, it's a real minimal example, but But I think you can justify it because you can blame the tariffs and Liberation Day for any kind of cost overrun. And what's the other person to do if they need it? Like if I needed cream cheese, I would have bought it, but I didn't buy it. But if you need to construct your building because you're facing risk associated with a milestone inspection report or a structural integrity reserve study because of your condo, different story. Now the other side of the coin is if you were a buyer, this is the time to start lowballing. I'm not saying take 20% off. I'm saying go low, because you will find somebody who's in a difficult situation for whatever reason. Maybe they just want to get the hell out. Maybe they don't want a condo. Maybe there's a life experience change, whatever. This is the time when you can just throw out lowball offers and you might actually get lucky. Why? Because we don't know what's going to happen. And if you're sitting there in a place you got to get out of by the end of the year, and you're saying, "Oh my God, we have this pause for till July on the rest of the world. We have this pause on the tariffs till August on China. Now we're going to have a pause most likely till September on Europe." You don't know what to do, and any offer that comes in, you might actually accept it if you need to get out the door, and you don't have more money than God, which is what every owner tells us.
You bring something interesting up, and we're over time on this topic, but I have clients, not just one client, 2 client, 3 client, 4 clients, and we need to get them more comfortable with offering more than 10% off, because I feel we've gotten to the point. Talk about contractors being greedy. What about sellers who think their shit don't stink? What about sellers who have seen 7, 10, 20% appreciation over the last few years in their condos? They go on Zillow and they look at their estimate before we even get a call, and they say, "Oh my gosh, I made $1 million on this $900,000 apartment from 2021. And it's like, well, first of all, you haven't sold it. You haven't transacted on it. These are just numbers on a screen. Let's put it on the market and see what happens. And then 100 or so days go by, and guess what? We haven't sold it. So I think sellers are looking at non-transactional estimates, and buyers and the like are looking at all these headlines, looking at all these appreciations, and saying, well, maybe it is worth $2 million. It's not worth $2 million. Maybe it's worth 1.4.
Listen, you want to know the easiest way, and the industry hates when I say this? What can I rent it for? That rent is 1% of the value. $100,000 place needs $1,000, $1,000 a month. You're going to say, wow, it's never going to work. It works. I'm telling you, it works. So if you want to price it out and you are a buyer, that's where you come in at. Why? Because who cares what happens? As long as you can generate enough rent to carry it, you're going to be good. Now, it's not perfect. It's simplistic. It's back of the napkin, but it'll point you in the right direction. 1%, your rent should be 1% of what the value is.
So is the EU tariffs a buy, sell, or hold? Peter, we buying it?
I think the EU tariffs are probably a hold, because that's what we're going to do. We're going to hold on and we're going to pause it like we've done 2 times before. And if we do that, that'll be 3. And in the world I used to live in the journalism world, 3 is a trend. So if the EU, if there's a pause there, everybody in the world's going to know that this is just talk.
Talk. All right.
Talk.
We're holding steady. What's going on in Clearwater, Pete?
So, we got the Surfside collapse roughly 4 years ago, June of 2021. A bunch of stuff changes, states requiring old buildings and new buildings all to be analyzed by licensed architects, licensed engineers. The process is, if you're over a certain age, i.e. 30 years or more, could vary, but let's keep it simple. You do an inspection, people come in, they check stuff out, they tell you this is wrong, that's wrong, this wrong. This is the shelf life of the roof, this is the shelf life of the facade, the electrical, yada, yada, yada. Then they give you an idea of what it's going to cost fix. Association takes a report, and now they have to act on it. They have to address it because we don't want another Surfside. That's what the legislature said. So there's a building in Clearwater, 12-story building or so. Looks real similar to what you will see over in Surfside, the one that collapsed in and around that area. And they do the milestone inspection. It's completed, necessary report. They fund it. The construction people start the job. Lo and behold, one of the main support pillars, it splinters at the bottom. There you go. There's a shot. It splinters. Now, everything had been done in terms of the inspection, and the work was underway. So the contractors, based on things that I've read and I've seen, contractors immediately call 911. 911 reaction is fantastic from what they say. Police, firefighters, and special response.
They evacuated how many? 60 people, right?
60 people were ultimately evacuated from the building at the moment. Happened about 4 o'clock in the afternoon, 3 o'clock in the afternoon. Well, construction guys typically knock off at 3.
Building? If I'm one of 200 residents and they tell 60 of my neighbors to leave, I'm leaving.
Well, anybody who was there was told to leave. They all had to get out. Now, people were probably at work, or maybe they were, having breakfast or lunch or doing whatever, or maybe they just weren't here. So basically, everybody's got to evacuate. They all have to leave. A couple days later, they say, listen, because people are complaining, and this is mostly fixed income senior types that live in this building. So what happens after the fact? They're saying, listen, I need my prescriptions, I need my money, I need my passport, whatever. So they set up a system where people can go in for 15-minute increments, one person at a time, go in the building, grab your stuff, and leave. Type of situation that goes forward. The engineering firms are brought in. They bring these steel poles. They try to shore up, as you can see in this picture, they're shoring up the pillars, the areas. Then they go balcony by balcony, taking these steel pipes, and they're affixing them from the floor of a balcony on one floor to the bottom of the balcony above. And they go over and over and over. They get it to the point where they feel as if they've stabilized it. A week later, they tell the residents, listen, if you're willing to go back in, you can, except for those people around the pillar, which is on the corner facing the Gulf of Mexico. Many people go back because they were complaining, I can't afford a hotel, I can't do this, can't do that. Now, the catch is, if you're going back in your unit, the 4 things you can't do. 1, you can't do any repairs. 2, you can't do any construction. 3, you cannot receive a package that weighs 75 pounds or more. And step number 4, you can't move furniture in your place if it weighs 75 pounds or more. So my question to you, Daniel, is would you go into a building built in 1975 that is fronting the ocean? The work was done. The expert said everything is cool. This is what we need to do. And lo and behold, during the construction process, one of the main support pillars splinters. And then if you do go in, you can't move anything more than 75 pounds or more. And they did not say if somebody who weighs 75 pounds or more could move within the apartment without any problems.
How many buildings or how many condominiums are in South Florida? You should know this.
Huh? So overall, state of Florida, 28,250 associations.
But here in South Florida.
Yeah, and 1.2 million units in Florida. South Florida, 13,000 associations, about 610,000 units. So basically half are going to be Dade, Broward, Palm Beach County. Yeah, for condos. Now, this doesn't include co-ops. This is just condos. Co-ops are, it was before we had condos, and condos came about in 1962, 1963 time or so.
And we should know this, but the percentage of apartment conversions, because I know a lot of these buildings in Miami Beach, for instance, up and down Collins and Venetians, North Bay Village, those were tenancies, right? And when the condo conversion wave came in the 70s and the 80s, it was the cool thing to do. But those condo associations, even though those condo associations might be 40 years old, those buildings were actually built in the 60s, right?
Correct. So what had happened, generally speaking, well, first of all, how do you make a condo and how do you do a conversion? It's real simple. The difference between a rental and a condo, my perspective, is a 300-page declaration of condominium, a fee paid to the state. It gets an approval, notifies the property appraiser, folio numbers or tax IDs are issued. You want to create a condo, you take this rental where everybody's renting, like Daniel's referring to. You file the paperwork with some attorney. You create the declaration of condominium. It's basically the bylaws. It's about this thick. Anybody who remembers what a telephone book looks like, that's about how high it is. And lo and behold, you have a condo. Now, if you want to terminate it, you basically go through the same process, the other steps, and you rip up this 300-page condo declaration, which again looks like about the size of a phone book, and it sort of disappears. So to do a conversion, you buy a rental building, you hire the attorney, and lo and behold, you file the paperwork, and now you have converted from a rental apartment to a condo. Nothing else changes other than the paperwork and the number of tax IDs associated with that property.
Got it. And so what, looking at Clearwater, what year was this building built? 75?
This building was built in 75, if memory serves me correct. It's called and fittingly or unfittingly, it's called the South Beach 3 condo. It's on what's called Sand Key in Clearwater.
We've gotten a lot more creative with naming condos in South Florida now. We got Aston Martin. We got Mercedes-Benz coming up. We're not even calling them Atlantis anymore. We're calling them...
Or Jacaranda. A lot of Jacarandas down here.
A lot of Jacaranda in Plantation, right? Yeah, the Jacaranda.
100%. Well, Daniel, let me ask you a question. So if you are a buyer, would you take a shot at one of these units, assuming you could pick it up dirt cheap? I mean, it's a building that you can't move furniture, you can't accept delivery over 75 pounds because they're not sure yet. Would you buy units in there?
I think it's very speculative now. I think, and well, not even me thinking. I have clients that have come out from have come down from the Northeast who live here seasonally. They have condos along Brickell, and they saw Surfside happen. And these are smart folks. These aren't people who are just going to blow $500,000 on a condo. But light bulb goes off, and they say, "Hey, Daniel, are developers buying these and knocking them down? Can I potentially get into one of these older buildings for 2, 3, 400,000 and then just sit on it? I can pay the taxes. I can pay the HOA. I might even be akin to paying a special assessment, because if that $400,000 today and it's on the water, a developer related, a PMG could come knocking and give us all $800,000-900,000 for it next year." And that is highly, highly, highly speculative. I can't stress that enough, but we see these terminations happening. You said it last week. You said, "What's the biggest lie?" And you said the biggest lie is a developer coming to you and saying that this is the last piece of waterfront real estate. And there is no more waterfront real estate. There are buildings on them, but we can knock those buildings down. And the whole vicious cycle of the property tax income for these municipalities, for the state, it enables this, because a $300,000 condo that, by the way, has a tax basis when it was purchased in the 80s for $50,000. So the owner of that unit, if it's homesteaded, is paying maybe a couple $1,000s in taxes. Or we can knock it down, build a new building, and sell that same square footage for $1 or $2 or $3 or $10 million. The tax basis on that, the tax income for the municipalities, for the state, is ridiculous. Why wouldn't we want to enable these sort of actions in a state that doesn't have income tax? Where, I know there's all this hoopla about eliminating the property taxes, but I don't know where the money is going to come from otherwise. But this enables the construction and development industry here by leaps and bounds. I mean, gosh, look at North Bay Village, for God's sakes. They're about to have a windfall.
Yeah, I'm probably the wrong person to ask about North Bay Village, because I'm not a believer in it personally.
No, North Bay Village is great. What are you talking about?
Well, I mean, listen, North Bay Village, and I've said this before. I did a bulk deal out in North Bay Village where a developer came in, had great dreams of building the ultimate tower and making an impression on the market, and went over the top, and it was floor to ceiling windows and water and blah 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 blah. We went in there and stole it. I mean, legally, but the price we paid was below replacement cost, significantly below replacement cost. And the reason was there weren't enough believers. And this is my argument why I don't think North Bay Village will ever work. Now, does it got great views? Yes. Does it have some marinas where you can keep your boat, maybe something like 360, that building, something like that? But the problem is with North Bay Village is you're always in transit. You're never at a destination. And people in North Bay Village are not going to be happy, but I sort of equate North Bay Village to like a rest stop on the turnpike when you're going from Miami up north, and there's only a few places to stop, because once you get on the turnpike, there's very few exits. And that's kind of what North Bay Village is. You're always in motion. You're always dealing with drawbridges on both sides. You got one to the east, one to the west, and you can't stay there. So you sleep there, but you always have to go somewhere else. And I think that's one of the biggest challenges in North Bay Village. I think somebody who's new to the market, they don't really understand that from a lifestyle perspective. It makes sense. But once you actually live that lifestyle, it really is a pain in the ass.
All right. So we're going to move on from Clearwater. Based on what we've seen happen in Clearwater, a building that did all the right things, they checked all the right boxes, and
doing the
work, they're in the position that they're in. Are we buy, sell, hold based on that? I'm selling.
Yeah, I'm selling too. I'm selling the vintage units across the board until they fall low enough. And what's the right price? I need to be able to rent it and generate enough every single month where if it takes 30 years, I'm not out of pocket. Put the cash down, let it throw back cash. Then I think it makes sense. If you were speculating and you're out of pocket to keep it afloat, that's definitely a sell. You do not want to touch that from my perspective.
So moving on, what's going on up in Tallahassee with HB 913? Everything I've read about it, I've done a few videos about it. I think some of the things I want to call out that, this is the kitchen sink bill, right? Enabling online voting for associations. I mean, something as basic as that. We're in 2025, Peter. Like, why is this a new thing? Online voting, lines of credit for reserve requirements. This can get kind of financially manipulative, kind of predatory. I can totally see how this can be exploited, but I think that is the best bad idea we have in terms of helping folks finance these reserve requirements, and then fixing the threshold for capital improvements from 10,000 to 25,000. If it's a little crack here or a little ding here, do these buildings really need to be fixing a $10,000 repair? Yes, they should not have to be able to kick the can forever, but is it something that has to be done now? And then the final thing I wanted to pull out of there that I thought was huge and kind of a no-brainer is banning inspectors from also bidding to be contractors on these assessment projects, which, duh.
Yeah, so I haven't gone through it the way I intend to at this point because Governor Ron DeSantis has not yet signed off on it. You may or may not remember there was a pissing match between the governor and I'd say the Senate versus the House. The governor is
House Speaker Perez, right?
Yep. Governor's a lame duck going forward. He can't get reelected. There is some talk potentially his wife runs, whatever story. I'm not getting into politics, but I'm just giving you a layout. So DeSantis called a special session in January to deal with this issue. What we call the Condo Association Financial Cliff. We called it the 2025 Florida Condo Association Financial Cliff. Governor called a special session in January, brings everybody in, all of the representatives and the senators from the state of Florida, gets all of them up in Tallahassee. They're required under the Constitution that if the governor calls them, they have to show up and they have to participate. The special session lasts in both chambers 20 minutes, maybe. You could not. I mean, we were 38 minutes late on this podcast. If we would have been late, we would have missed all of it. That's how quickly the special session was ended. So the special session opens, it closes. Then the legislature decides we're going to open our own special session, and they take up immigration. So immigration and condo stuff was related to the special session that Governor DeSantis called, lasted all but 20 minutes. They then set up their own special session. They deal with immigration. They put in place a lot of policies we're now seeing play out today in Florida in terms of working with ICE and other stuff. But so fast forward to the legislative session begins in March, ends May the 2nd, I think. And one of the key bills is HB 913. It's put forward by Vicky Lopez, who's down here. She's a state rep Republican. She represents Key Biscayne and Greater Downtown Miami. She goes forward a bunch of different legislation. I would say from my reading of it, it's more industry, developer, insurance. The Senate side, which the governor has more aligned himself with, is more like for the consumer. And the battle was, what are we going to do? Because everyone's getting hit with these special assessments, these maintenance fees, the yada, yada, yada. And there was a compromise that was reached. And one of the, I mean, if you're a condo owner or if you're somebody who's looking to buy in a condo, the part that they talked about, and again, I haven't gone through it yet because it hasn't been signed. I don't want to waste my time in case he somehow vetoes it, which he probably will not. But that being said, is they're going to give people an extra 2 years, basically, to complete some of these studies that were required. Now, there's two studies, structural integrity reserve study and milestone study. They're going to give them extra 2 years, especially until they have to start funding it. That was the deal killer. That's why we declared it a cliff, because in 2025, if you passed the budget now, you could no longer defer what the estimated costs were going to be. You had to actually start to fund it. And keep in mind, you get a special assessment. You get a year, you get 12 months to pay for the special assessment. Otherwise, the condo association has the right to go.
Is this just delaying the inevitable?
Yeah, no, it's kicking the can. This is the same thing that President Obama put in place during the Great Recession, in that we had the HOPE program. Remember that? I think that's what it was called, HOPE, to keep people in their homes and help them kind of work things out along the way. And who's to say what came of it? I know some people who participated in the HOPE program, they end up losing their house, but 2 years later or whatever it was. So we're basically just kicking the can down. the road. It's probably like a last bit to try to help people who are in their condos to try to maybe get out or do something. But ultimately, the writing's on the wall. The inevitable is going to happen. Many of these people are going to get blown out. They're going to get crushed, and the towers probably are going to get terminated.
So is this again? So kicking the can, and you said it right before I cut you off. I'm sorry, but is this basically just giving developers more of a runway to figure out? All right, is this a candidate? Is this a candidate? All these buildings, these developers, these real estate attorneys, friends with most of them, they have their candidates. They have spreadsheets, binders full of candidates, as Romney might say, binders full of candidates, and which ones are going to accept. Now, if this legislation doesn't get passed and they're not able to kick the can anymore, well, we're kicking it into fifth gear. We're gonna see more terminations. But if we're able to kick the can, then aren't we just treading water? That 2019 condo cliff that we should have seen 6 years ago, as you always point out.
Yep.
Are we just going to see it in 2027 now?
Oh, no. This is going to be this particular pullback. Listen, I'm getting a lot of attention because I called the 40% price decrease. I was talking to a national newspaper yesterday or Wednesday. I'm sticking by that call. I see prices pulling back 40%. But what I will tell you though is all of this is simply we're gradually moving into where we need to be. At the end of the day, everybody will agree we need safe buildings. We also need to make sure that people they know what it really costs, and there's no deferring of maintenance fees and taking chances and seeing cracks and seeing all kind of steel pipes holding up these buildings. So we're kind of going to where we need to be, but this is a great transformation of the condo market, which began in '63. It had its buildup. We had some problems. Then they made some changes after Hurricane Andrew in insurance. Now we're going through what I called right after the Surfside collapse. Surfside has the significance of Hurricane Andrew. Hurricane Andrew led to a bunch of different things, including a Florida.
Right, we're living in a post-Surfside world right now.
Yeah. This for anybody who wasn't in and around for Andrew. I got here 10 months after Andrew. Anybody who wasn't here for the repercussions and ramifications of Andrew, you're going to be pointing to Surfside as that moment in time when everything sort of changed. So the way you used to look at condos in Florida, you ever seen the show Golden Girls?
I'm not that old, Peter.
No, but you've probably seen the reruns, or maybe your friends,
of course,
your grandmother or grandfather, whatever. So if you take a look at the skyline there from Golden Girls, it opens up in Miami, and they're supposed to live in Miami Beach or somewhere, or Palm Beach, something like that. But that's kind of what Surfside was. It was the end of an era and the beginning of a brand new era. So the cost of living in one of these condos going forward, it's never going to be the same. It will 100% not be the same. We're actually seeing in places like West Palm Beach, where a vintage unit, which is again 30 years or more, it actually is asking, the premium is higher than an overall condo. Why? They're bigger units. They got more amenities, and the people up there, apparently they're doing all the necessary work. They're more conservative oriented. They were spending the money, and the buildings that are safe and sound and in the right locations, they're offering you stuff a brand new condo won't. Think about it. Back in the day, a one bedroom was like 1,200 square feet.
You got the racquetball courts.
Yeah.
You got yeah.
I mean, one bed was 1,200 square feet. Today, what is it? 750 square feet.
Oh, they're doing 2 bedrooms in the Grove at 900 square feet. Jeez.
Exactly.
I was in Grove Isle today. You know what Grove Isle had back when it was built in 1980 in Grove Isle Tower 1? They had nanny apartments.
Nice.
They had nanny apartments that, by the way, are sitting empty right now. And the rumor is that they're going to be demolished and they're going to expand the gym. But back then, that was a thing. I want to have my housekeeper, my live-in, live with me, but I don't really want them to live with me. I want them to live downstairs, mind you, on a private island in Coconut Grove. Not a bad life, but they don't. Developers don't build these things in anymore. They have, we have car elevators and pickleball courts and cold plunges. Those sort of amenities just aren't built into new buildings today. Partly because there's less land. Santa Maria, Bristol, these were built on 5-acre lots? What new construction building in Brickell is built on a 5-acre lot? Well, maybe the Mandarin, right? Which, by the way, we'll talk about that next week. They're knocking it down.
Yeah, knocking it down. I remember when it opened, and now they're knocking it down.
It's
You know,
not. It's not that old. When did it open? 2000.
it was a little bit after 2000. Yeah. I listen. I've been here so long. I remember when they were first putting up the towers. I mean, the reason it's called Brickell Key, as you know, there were two buildings there called Brickell Key 1, Brickell Key 2. It's actually called Clawton Island, and it's built from dredge. They dredged the river. They dredged around. They dumped it all in this area. Old man Clawton. I say that in just. Old man Clawton, basically, he bought it ultimately. It ends up in the hands of Swire Properties, who's out of Hong Kong. And, they go ahead and they build everything that they do. They run out of dirt, so they jump across and they go to Brickell City Center. But we can talk about that next week.
I think we should do a segment on Swire. Swire, by the way, an amazing organization. I mean, they came to Miami from the other side of the world. They're basically Martians, right? And they came in and they benevolently invaded Brickell, and they built Brickell Key. And then 20 years later, they came back and they built Brickell City Center. And I applaud them. I think they really did a fantastic job. Some people don't.
A funny note on that, just to give you context. So when they bought the dirt for Brickell City Center, one of the clients I was working with at the time, I think everybody was. Remember when you go through a dramatic pullback, land has no value. It's negative. Remember how during the pandemic, oil was negative? There was a moment when oil was like, what was it, negative $32 a barrel or something?
I remember it.
So did land. I want to say at the time, and I'm going off memory here, this is going back, 15 years or so. I want to say that land cost was somewhere in the ballpark. It was south of 100, 150 a foot. Just to give you an idea for Brickell City Center back then. Because remember, there was a nursery, there was a 7-Eleven, there was all this type of stuff. You couldn't give away land. You know where Petaiso is up in Edgewater area? Yeah. Well, that was a failed project. Part of it was a failed project called ICE. It had a different meaning back then.
Aptly named.
But just give you an idea. So when markets go down, land has no value, at least down here, because you can't do anything with it unless you do something like Wynwood Yards attempted, where you bring in some roach coaches, which is old school way to say a food truck. You bring in some roach coaches, and you sell some booze, you put up a stage, and next thing you know, everybody's going there, you're charging a cover. But otherwise, you can't do anything with land. What are you going to do? You're going to do a drive-in movie theater or a drive-in theater?
Well, nobody goes to regular movie theaters. Who's going to want the novelty of a drive-in movie theater?
That's true. We will get into that next week with Swire. I got some interesting stories I can share with you about that.
So on HB 913, are we buy, sell, hold on this?
I think HB 9. I'm a buy because I think it's showing some compassion.
I think it's
before the ultimate end.
It's a step forward, right?
Yeah, it's going to give people a lifeline. It'll give them 2 years to kind of figure stuff out. Doesn't mean they're going to get a better price. It's just they're not going to get crushed immediately.
Yeah, I agree with you. Well, let's get into something a little sexier. Maybe not up your alley, but everybody loves spec houses, especially when they are.
Well, you probably should define spec for the audience.
Well, so a spec house, yeah. So a spec house is speculative, right? I buy a plot of land and I'm going to build a very sexy looking house with hopes that I can make a lot of money from it. That's the most layman I can put it. What do you think?
And I don't have a buyer in mind. Buyer is not putting any cash down. I'm rolling the dice.
I'm going with it. And so there's a gentleman named Tom Glasser, and he has rinsed and repeated this strategy on Miami Beach many a times. And the latest one he has, and let me pull it up here for those watching on the YouTubes. Peter, I hope you can see this because it is quite a sight to see. They had originally listed it for $34.5 million back in December. He bought this, by the way, a few years back for $12.5 million. This is the original house. Let me pull this up. This is the original house. I mean, classic Miami Beach, Art Deco on North Bay, 47th and North Bay Road, right? And this sold for $12.25 million back in 2021. Todd took this and then built this, which, look, 20, 30, $40 million. I don't operate in this space on this ultra lux. I hope to someday maybe, but just this spot alone, is it worth $30 million? David Beckham just down the street closed on a house that, you know what, if you put them right next to each other, I might not be able to tell them apart. And he paid $72 million for it. So, you know, where do you find another $40 million in value just a few blocks away? How do you price these things? Is it like contemporary art?
Well, I will here's the good news from my perspective. I don't know anything about single family. The reason I don't follow single family, it's like a work of art. Every house is different. Every heart is unique. The layout, the trees, the location, the size of the lot, the shape of the lot, it's all unique. A condo is a commodity, so I'm able to sort of take a look at that. But so what I would offer to you is if he sold the place and he sold it in and around now, the good news is a lot of the nefarious types of buyers who used to exist down here, many of them have got run off unless they figured out a new hustle. We used to have a lot of money launderers who were doing stuff. We used to have all kind of, ways around it where you pay all cash and the feds didn't know who was doing what. Then they put in certain rules where you gotta, if you pay cash, i.e. you don't have financing over a certain dollar amount, the title company's got to figure out, or the attorney's got to figure out who the ultimate end user is. So a lot of that bad stuff has disappeared, and a lot of the fake money has sort of disappeared. So I'm assuming this is probably real money. I'm also assuming it's probably not real smart, real money. To drop that kind of cash at this moment in time. My question would be is what was his burn along the way? If he closed in 2021 and he's just coming online now and selling it. So he had a little bit of a carry along the way. It wasn't homesteaded, so his burn on the property taxes, if he dropped $12 million in 2021, so I'm just saying there's a lot of carry along the way associated with it. But, and then my final question that I would ask is, okay, if I buy this place and I need to get 5% appreciation annually just to keep up with inflation, inflation's 2.5%, let's call it, just to keep up on inflation and kind of beat it a little bit, what do I need to resell it for? And is the market going to be there to resell it when I decide to exit it, whether it be 5 or 10 years from now? Maybe you say yes because of the tariffs and inflation. I don't know.
And that's a great question. I mean, if these builders, if these single family home spec builders, and I know there's a lot of GCs out there who, they get commissioned to build these 30, 40, $50 million houses. But this is, definition of a spec house. If there's enough spec house builders, when does the music stop? When are folks going to get caught holding the bag? When it's one thing if Lennar has 20 houses or maybe 50 houses down in Homestead, but these are, $700,000, $800,000, $900,000 properties, and they're a large multinational corporation. What about single investor, or maybe he has a few investors who, helped him capitalize a $12.5 million purchase and his construction loan, yada, yada. Getting caught on a carry for something like that for an extended period of time, that's risky. And granted, the market rewarded him fairly. He probably made about $10 million on this house.
Well, what I will tell you is Toll Brothers, which is a publicly traded home builder, they just came out with earnings this week. And part of the earnings, the report, this was a story, Daniel, that I had forwarded to you, but unfortunately it was all video, so we weren't able to use it. Their year-over-year sales prices are actually down. This is a brand new product. And what they're also seeing, too, is that the pace has slowed down. Now they're taking a position where they're trying to maintain pricing and not give too many incentives. But what many analysts are saying is they're probably going to have excess inventory. They simply built too much on the spec side. So the gentleman here, Mr. Glazer, maybe he wanted more. I don't know what the original ask was, but maybe he wanted more.
They were asking 34.5 and they closed for 29.5, I think.
Okay, so there you go. So he's probably sensing what's coming, at least according to Toll Brothers, dealing with single family houses. Now, Toll Brothers, they build luxury houses. They don't build this type of luxury house, but the market's preparing for a slowdown, and there is talk. And I'd encourage you, if you're playing the South Florida market or the Florida market, pay attention to Lennar. Lennar is a large home builder based here out of the Miami area, in and around Doral. And Lennar is very aggressive with their land and with their movements. During the Great Recession, they had a bunch of dirt. They unloaded this stuff ASAP when they sensed what was going on. So if Lennar makes a big move to dump, this is a local telling you, this is going to get, it's going to go sideways. So just watch Lennar if you want to know what's going to go on with the single family home market from my perspective. Now, as a side note to Lennar, remember I mentioned Wynwood Yards?
Yeah.
Well, Lennar, during the build up to the Great Recession, they built their one and only condo tower down here, and they lost their ass. 360. A lot of it ended up selling in deep discounts. So they're very good at the single family, and apparently they're, I guess, good at the rentals, but they're excellent at single family. And condos not so much.
Lennar built out everything in South Dade, no?
Yep. No. I mean, they're giants when it comes to single family, and they realize the Miller family realized the advantage of first mover. So if they see something going on, they'll start dumping dirt. And watch for that story. If that story hits that Lennar is dumping dirt or they're going to be bulking out single family, then you know what position to take, because you always want to be on their side for the marketplace for single family, not on the condo side. Whatever they do on the condo side, take the other side of the trade.
So if you see a single family spec house on North Bay Road in Miami Beach trading for 15% less than asking, what do you think about ultra luxury single family? Are we buy, sell, hold?
I'm going to put it. I'm going to say a buy, but with an asterisk. The asterisk is that luxury stuff is probably trading significantly below and will continue significantly below what was originally asked. So it's picking off right off the holidays the best quality stuff for a 10 or 50% discount. So I would be a buy on that if we're talking ultra luxury type.
Okay. Well, I mean, all the data points in that direction. Over $10 million, we're actually seeing, I think it was 14% appreciation year over year. No, 14% in volume year over year. 14% in volume of 10 million plus year over year. That blows my mind.
Well, something else to keep in mind, and I don't know if I mentioned this last week, but Florida, because of the homestead opportunity where you have a primary resident declare a homestead, it's basically untouchable. There was a guy who was involved with Enron back in the day, 20 years ago, when he ran into criminal problems because of financial issues. His place in Boca Raton was fine because it was homesteaded. So who knows? Maybe there's some people playing games out there. Maybe they're being ultra aggressive, and maybe they want to park a lot of cash in a Miami Beach or a South Florida place, homestead it, and then when shit hits the fan, you can't touch it.
Yeah.
And that's why I mentioned the Enron boy, Mr. Skilling.
So you're buy?
I would say a buy because it's good quality. It's probably a work of art, and you're going to get a discount, which, by the way, people say, well, how's the market going down if the sales are down but the prices are up? That's how. You see a discount on the really significant, pricey stuff, and the smart money knows if they can get great value at a discount, it's the time to buy, even if it's not necessarily the right timing. Price-wise, it makes it the right time to buy, and that's why you get off your couch and you actually do your deal rather than simply letting it continue to fall. Because quality will always trade regardless of market conditions.
All right, and that transitions us to our last topic of the day, and being in the right place in the right time, getting off your couch and getting it done. Are they getting it done in Coconut Grove with these terminations that are coming across our desks? What is going on? David Martin launched The Well. They knocked down a building in about half an hour a few months ago over there. Funny enough, he's not Related Group. He's Terra, and he knocked down a building in front of Related Group's headquarters, and he's building The Well, which is, I think it's an 8-story mid-rise, and it's gorgeous. He hired David Siddons to help him sell it. David's very good, and I don't think he would take on a project that he didn't believe in, that he didn't think he could sell. Now, that's a big plot. If we go a little further into West Grove, there are some rumblings of some other terminations abound. Some of them aren't public yet, some of them are, but I'm talking smaller buildings. I'm talking, 16 to 60 units, heavy on assessments, all built in the 70s. What's going on? If you were a developer today, Peter, would you be looking at the Grove, looking at what David Martin's getting in pre-construction sales for The Well? Do you think that's Do you think that's speculative, or is that just shrewd market analysis?
Well, first of all, begin with the name, the Well. Depending on how the market goes, it could become the Pit. I'm just putting that out there. So if the thing goes sideways, so it's a very gutsy call on that side. Listen, Coconut Grove has got a special niche. It's one of the first communities down here in South Florida. Old Man Monroe, Ralph Monroe, the Commodore, the Commodore Trail, all this type of stuff. So the Grove is a very special place. It's got links to 1960s and folk music and everything that happened out in California and the hippie movement and what people were doing at the Tourist Bar. It's got a lot of history. The Grove is kind of call it bohemian somewhat type of neighborhood, distinctly different from many other places you would find in South Florida.
Beatles used to hang out in the Grove, for God's sakes.
100%. Where did they drink? That's the question.
I don't know. Taurus?
Yeah, right. You would think, which the Taurus, by the way, as you know, is still standing. They built a condo around it. They kind of changed it. It's still the same structure, but it's not not the same vibe. I used to drink at a place called the Hungry Sailor. I don't know if you remember that. They had penny beers, like on Tuesdays or Wednesday with reggae night.
Penny beers. You can go to Chugs and get a 25-cent martini.
Oh, now we're talking.
Now
wow.
Yeah, buy.
I think the Grove is very unique. A lot of people would sort of want to live in the Grove. I think the lot sizes are such, it might be a little bit challenging to really maximize it. So you're really going to almost have to build like a floor, a unit per floor.
Well, that's what we're seeing. We're seeing that, alongside 27th Avenue. I think it's a little more obvious because it's a main thoroughfare. I see 27th Avenue as the northern artery to get into the Grove, whereas you see Grand Avenue as the western artery getting into the Grove. But we're seeing redevelopment. We're seeing the Lincoln go up right there behind where they put the Mr. C. We're seeing Meta Development is doing Opus right from that. I think the first one was Glass House, which is the same developer who's putting up the Lincoln right there across the street. 27th Avenue between US 1 and Bayshore will become the new Millionaires Row in boutique condo buildings. And they're building 16-unit buildings starting at $2.5 million. That's what we're talking about here.
Yeah, it is an isolated, insulated type of market where people will come for it. But everything in real estate takes 3 times as long.
I've seen over the years no less than 3 or 4 master plans for Grand Avenue that never came to fruition.
Yeah. I mean, the only thing that is set in stone in the Grove is the Goombay Festival, which I'll be going to the first weekend in June. Anybody doesn't know, it's a Bahamian festival, street party. You just go to the Grove and you'll hear the music and you'll smell the fried conch or the crack conch or the conch fritters. So that's the only thing that's really predictable. But it takes the good thing is that they're very protective of it. The trees, the field, the vibe. Unlike many other parts of South Florida, other than maybe like South Beach Art Deco District. But the Grove people are very proactive. It's a certain type of crowd, and if you build there, you're probably going to do okay. It's just you're gonna it's kind of a slower grind, I would say, is probably what they're looking for. But and David Martin, he's talked a lot about it from Terra. I guess he grew up in and around there, and that's why he is so fond of it. And he's trying to single-handedly bring it back. George Perez took his shot with Park Towers or One Park, whatever the hell he's calling it. But the Grove is cool. Nothing wrong with it. I expect big upside. The problem is you're not going to get high density. It doesn't have like a New York State tonnage to catch everybody's attention. It's more boutique oriented, niche oriented type of stuff.
It's
from
the
my
West
perspective.
Village of South Florida.
Yeah, 100%. Yeah, 100%. Yeah, I love it. And you still got the regular places there, the Barracuda on Commodore. No, on Little Side Street.
Except Alan, the dry cleaners there. And I didn't know this until Alan Morris bought it. But the guy who owned the dry cleaners owned the whole thing.
Yeah, that's going. The little Thai restaurant in the back of the Quickie Mart.
Oh,
that's going. The Carrot. What is it? The Carrot Express.
The Last Carrot. No, Last Carrot.
That's gone. All of it's gone.
There's a great place across from there. Remember where the Argentinian steakhouse? It was a Fuddruckers on the second floor, and then it was.
I remember the Fuddruckers. Yep.
Yeah, and then so if you go downstairs, not on the main highway side, but in that parking lot, so looking at Grand, there's a little sushi place called Midori, and I'm not scared that everybody on here, all three of our viewers right now, is going to find out. But Midori, it's BYOB, and you can
Yep.
go across the street to the little quickie mart where they'll upsell you on sake. You go get your sake, you go get your beers, you go back across the street, and you do some sushi, a little poke bowl, and you got your six pack. Obviously for two people, because who drinks a six pack by themselves? That'd just be absurd. But the Grove still has that vibe, despite the Grutmans going in there and the Mr. O1s and the Narbonas. There is still that very neighborhood vibe, and I think we were talking about spec homes a few minutes ago. There are not the Todd Glassers of the world, but folks spending several $1 million, $2 or $3 million building spec homes there in West Grove, because you have the New York contingent or the California folks coming over here. They'll spend a year or two in Brickell, and they'll be like, I had a kid, can't do the 2-3 bedroom apartment in Brickell anymore. It's too loud. There's guys with rented Lamborghinis going 100 miles an hour down Brickell Avenue.
Yeah.
I want
Yeah.
something a little more quiet. The Gables is a little too gentrified for me. Not gentrified, that's the wrong word, but a little too buttoned up, a little too Polo Ralph Lauren. And the Grove still has a little bit of dirt rubbed on it, right?
Yeah. True.
And
And no sidewalks, which I love.
no, you're right. That's where we differ. That's where we differ.
Listen. In Miami, if you let me give you a golden rule. By the way, I do walking tours. I'm bringing them back. I'm going to be doing
I saw
one.
that. Do a plug for the walking tour.
Yeah, I'm gonna be doing it next weekend. But here's the rule I tell everybody who goes on my walking tours. We do 3 hours. We walk like 4 miles, pointing out stuff, giving it's all kinds of stuff. And what I tell them is, don't walk in the grass. A grass is like Cambodia, where there's all kind of landmines, and you don't want to be a water buffalo that gets blown up. Because if you think about these buildings, they're 300 units tall. You got 1.5 people per unit, ballpark, and you got 0.5 dogs. And how much space do they actually have? So you never walk on green. You only walk in the street in downtown Miami and in the Grove. Grove doesn't have to worry about the water buffalo situation, but I don't like the sidewalks. I don't like the grass around it. I like the road, the street.
Just build straight to the property line, huh, Peter?
Right on the street. I mean, something about it. The other place that has that is Bay Harbor Islands. No sidewalks, really.
Bay Harbor Islands is beautiful. So you like Bay Harbor Islands more than North Bay Village?
Yeah, I don't like North Bay Village simply because I've done deals there. Like I said, we did the bulk. We went in there and we stole it from a developer. Stole it legal, it's legally, but the price wise, we just, he got tomahawked. And trying to resell it and just seeing who, the people who are coming in there. It's always, you think you get the first mover advantage, but it ultimately becomes a value trap, if you will. You go in there, it looks like a great deal, and then when you try to get out,
yeah, the old saying, early bird gets the worm, second mouse gets the cheese, right?
Correct. Yeah, so that's my take on North Bay Village based on experience. Now, maybe something's changed, but you're always in transition. And most importantly, they lost their primary attraction, North Bay Village, which was an old crappy bar called Happy's Package Store.
Oh, I thought
they replaced it with a new version, but the original one back then.
I thought you were going to say the Benihana. Isn't that still there?
That is still there. That's still there.
That just puts us at time. But Coconut Grove Terminations, is that a buy, sell, hold?
I'd say it's a buy if you're a niche developer or a niche user. If you're somebody looking for tonnage, a lot, you're probably going to hit your head against the wall too much.
Land is expensive in the Grove. You're looking at $200 plus a square foot.
Yeah. No. I mean, the Grove is probably like a bond. You put your money in there, you don't really have to worry about it. It's going to go forward. It might not throw off as much as you want right away.
Well, depending on where you are, half the Grove's in a very dire flood zone, but the other half is the highest part of the city of Miami, right? If you're up on the ridge on Bayshore, you're what, 25 feet above sea level?
And that's a great point. That is a great point. That's one reason probably people will probably go there. I mean, I'm fond of the Grove. I like it, but I remember the Grove back in the day with Cocoa Walk and all that type of stuff, where it was the only place to go before they opened a cinema on Lincoln Road. And Lincoln Road was like sketchy at the time, just to give you context. So that's what I remember when it was like that, kind of what we have today. It's cool, but it doesn't have the same vibe. It's more like, it's longer in the tooth, if you will. And it's more posh.
So we're a buy on Coconut Grove Terminations. We better let's put our ear to the pavement and see if next week maybe we can give our viewers a little more context, because it's happening, guys. All of these old buildings, they're not just in Williams Island and Aventura. They're not just in North Beach. They're in our backyard. Well, my backyard. I'm in Coral Gables. And yeah, land's expensive. Maintenance is expensive. Assessments are expensive. Insurance has doubled, at least for everybody. It's a wacky world out there right now. And this is Buy, Sell, Hold Miami, South Florida Real Estate Talk Show. My name is Daniel Hernandez and Mr. Peter Zalewski.
And if you're interested in a tour next Saturday, I'm going to be doing them every 2
There's
weeks.
The plug.
Yeah. You go to the website, miamicondo.club. If you're a do-it-yourselfer, you think you can do it on your own, you're interested in condos, you want to get information, we're putting out all kinds of stuff. We do have a paywall. We give you some stuff, but we have stuff behind the paywall. So that's something to consider. And if you just want to walk a market, you want to figure out how to analyze a building very quickly, I'm not going to tell you about the interiors and what they look like and stuff like that. But you want to know how to analyze.
That's what you're bringing me along for.
Yeah, 100%. I look at the buildings, I look at the numbers, all the rest of it, that's not necessarily my thing. But yeah, so if you want to walk the market, feel free to check it out. But it's miamicondo.club.
All right, gang.